Alright, so now we continue in our discussion of ARC Section 80 as it relates to financial statement compilations. And up until this point, we have decided that we are able to comply with ARC Section 60A and that management has acknowledged its responsibilities, for instance, for the preparation of the financial statements and for the selection of the applicable financial reporting framework. We've decided that we're able to fulfill our ethical requirements and responsibilities, and so we have decided that we will accept the compilation engagement. And so now we need to agree on the engagement terms with our client. And so it says here that we need to agree upon the terms of the engagement with management or those charged with governance as appropriate. So some companies might not have a board of directors, so maybe we would just have an engagement letter with management in that case. And it specifies here that our agreement with management or those charged with governance or both needs to be in a written form and a written agreement, which we typically call the engagement letter. And so within that engagement letter, we need to include objectives of the engagement, the responsibilities of management that's set forth in ARC Section 68.26c, which we discussed in a prior video, as well as paragraph .08 of this section, which we discussed in the last video. Also in the engagement letter, we need to include the responsibilities of the accountant, that's us. We also need to include the limitations of the compilation engagement. We need to include the identification of the applicable financial reporting framework that the financial statements are prepared with. And we also need to include the expected form and content of the compilation report, and a statement that there may be circumstances in which the report may differ from its expected form and content. So in summary, we need to include all of these items in an engagement letter with our client when we're performing a compilation engagement. And our client, which may be management or those charged with governance or both, needs to sign that engagement letter. And the accountant or accounting firm needs to sign that engagement letter too. So we have some explanatory material at A11 through A16. So let's go down to that section and understand specifically what we need to include in the engagement letter. So let's go there now. Okay, so now we're in the explanatory material as it relates to agreeing on the engagement terms with the client in our compilation engagement. So first they tell us that both we, the accountant, and management, or those charged with governance, have an interest in putting together this engagement letter and agreeing explicitly on the terms of the engagement. And from we, the accountant standpoint, it reduces our risk that management might inappropriately rely on or expect us to protect them against certain risks or perform certain functions, including those that are management's responsibility. So we know from prior videos that a compilation engagement provides no assurance on the financial statements. So, and also that management's responsible for its financial statements, for its internal controls and its detection and prevention of fraud, etc. So we need to make those items known and explicit so there's no confusion as to whose responsibility is what and what they might inappropriately rely on us for. And next we discuss whether we should have the agreement with management or with those charged with governance, and that wholly depends on the structure of the client. Some clients might not have a governance or a board of directors or someone outside of management that governs the entity, and other entities might have such a structure. So we might have that agreement with management or those charged with governance or both. And we'll see later on that it's easiest to have an agreement with both, or at least have both of them sign the engagement letter. And that's because, as we see here from ARC Section 60A.26c, we're required to obtain management's agreement that it acknowledges and understands its responsibilities. So if we just get the engagement letter with those charged with governance, we would have to have another agreement with management that it acknowledges and understands its responsibilities. So the easiest thing to do is just have an agreement, have the same agreement with both management and those charged with governance, and have them both sign that single agreement. And so we see here that if there's a third party that's contracting with us for the compilation of the financial statement, we would still need to get the agreement from management that they understand and acknowledge their responsibilities. And so no matter who we have the engagement letter agreement with, we still need to get the acknowledgement from management that they acknowledge their responsibilities in writing. So usually the easiest thing to do is just have management sign the agreement that we have with whoever's contracting with us for the compilation engagement, because that engagement letter will include management's responsibilities that they can sign off on. And they've reiterated here that an oral understanding on this agreement is not sufficient, and that we need to have this stuff in writing, and that's usually in the form of an engagement letter. And that's the most common way to obtain the agreement with management. It's also the most convenient method for documenting the understanding with management regarding the services to be performed for the compilation engagement. And we remember that in a prior video, one of management's responsibilities is for the fair presentation of the financial statements in accordance with the applicable financial reporting framework. And that's management's responsibility, even though there may be circumstances where we, the accountant, actually prepare the financial statements. But those financials are still management's responsibility, and we need to make that known in the engagement letter. So we have some illustrative engagement letters down here in Exhibit A, and that will help us see how we can put all of these requirements together and make sure that we fulfill our requirements in this ARC section. So let's go down to Exhibit A and take a look at these illustrative engagement letters. Okay, so now we're down in Exhibit A where we have some illustrative engagement letters where we can obtain and acknowledge the terms of engagement with management. And the first one is engagement letter for compilation engagement under GAP. And Illustrative 2 is the same, but there's a few differences, and that is that the financial statements omit a statement of cash flows. They also omit substantially all disclosures required by GAAP, and our independence is impaired. So we'll see in later videos and sections of ARC Section 80 that all these things are okay. We just have to disclose them in our compilation report. So in these engagement letters, we will just make that known. And in illustration 3, we have a compilation engagement, but it's prepared in accordance with a tax basis of accounting. And we remember from the prior video that if they are using a special purpose framework, then management has to acknowledge its responsibility to discuss in the financial statements, or at least in the compilation report, the difference between GAAP and the tax basis of accounting. So let's dive this first illustration here, which is the generic compilation under GAAP. We see that it's addressed to management. We requested to prepare financial statements. And so our responsibilities, our objective is to prepare the financial statements and to assist the client in presenting the financial statements with and provide no assurance. So basically the definition of a compilation engagement tells them that the engagement was performed under SSARS and that we're required to comply with the Code of Professional Conduct promulgated by the AICPA. It also tells us the limitations of a compilation engagement. And then next we have management's responsibilities, and that is for the selection of the accounting principles and financial reporting framework, for the fair presentation of the financial statements, for internal controls, the prevention and detection of fraud, complying with laws and regulations, and for providing us all of the information that we need in order to prepare our engagement or perform our engagement, and for the accuracy of all their documents and such. And next it contains the form, or it describes the form and content of the compilation report that we will issue, and management's acknowledgement that they will include that report in anything that contains the financial statements. And next we have some more administrative stuff that's not necessarily required by ARC Section 80, but that might be useful for our firm to agree to with management, for instance, our fees, the timing, maybe other disclaimers and such. And then finally we see that this engagement letter would be signed by us and also by a member of management. So all of these items that we have made note of in this engagement letter are directly from this ARC Section 80, from the section we just discussed, as well as the prior video, for all the things that we're required to agree to with management, and including management's responsibilities as it relates to the engagement. And so the next engagement letters will follow the same structure, only they're modified for specific circumstances. And so we can skim through this quickly. We got the same introduction here, only we say it's not includes a statement of cash flows or notes to the financial statements. Our responsibilities are the same, and their responsibilities are the same. The report will be a little bit different, which we will discuss in subsequent videos when we're going through the report, but the report will have to say that management elected to omit cash flow, the statement of cash flows and disclosures, which isn't in line with GAAP, and that's okay for our purposes, but it needs to be disclosed so that the users of the financial statements will understand that. And finally, the last is the compilation when the financial statements are prepared in accordance with the tax basis of accounting. And so that will be substantially the same as the engagement letter when we perform the compilation in accordance with GAAP. The only difference, as we discussed, is that management is now required to disclose the difference between the tax basis of accounting and GAAP and what that means. And so here in our engagement letter, we need to obtain from management's acknowledgement that it's required to disclose that information. So these are some good templates of engagement letters when we are initiating engagements with clients to perform a compilation engagement. So in the subsequent videos, now that we have agreed to the terms with management, we will go through how to actually perform this engagement.